on the Muhurat, in the Muhurat session itself. There you have it, Prashant, the first bet.
Well, I think it's looking pretty, it's a slower kind of a start as expected. And you've got the Nifty, which is starting down about, a third of a percent or so. And you've got the Sensex, which is down about a third of a percent as well. Mid-cap index is down about, actually everything is down a third. The bank Nifty is down about 0.3 odd percent as well. So that's the picture in terms of the large cap indices. I'll get back to mid caps, etc. But Nigel, you want to take us through the bigger ones?
Well, yeah, that's right. Let's focus on a few names then in stocks that are moving around here. Biocon, well, that one's pulled back in today's trading session. So that one should come up for you on the screen. You have SAIL as well. That's pulled back a little bit. Those numbers, actually adjusted numbers weren't very, very good. But yesterday the stock was more or less flattish to a mild positive take. So that's one stock you should look at. Biocon, Glenmark Pharma and SAIL, all of them have opened up in the red. You have REC, the big outperformer of 2023. Well, that's pulled back a little bit. What's doing well? Well, a few stocks that deserve special mention. You have BHEL. The stock has moved up a little bit, not too much though. A few more notable movers today. Mopin Labs, well, that's down close to 2.5%. Volumes are rather higher on that one. A couple of other notable stocks. You have Orient Green Power. Well, that one as well is up close to around 2.5% odd. And Marksans Pharma, in this month itself, that stock is up close to around 30%. I remember in the past, there has been hope on the stock. And then, in fact, delivery has been short. But last couple of days, it's been doing well. I think post its earnings, the street seems to be a little bit excited on Marksans Pharma as well. So that stock trading in the green. Nifty, though, down close to around 65 points. May not be such a bad thing. Maybe if it moves to around that 19,460 odd level, maybe in fact, which it is at, we'll have to see how risk reward favors them. The Nifty Financial Services Index, though, that's the one that plays out expiry. So that's going to be the swing factor for the second half of trade.
Well, talk about a bunch of big movers, Nigel. You have Eicher Motors thumping away in the morning, the top Nifty gainer up almost 3% now and adding on to those gains on account of strong numbers coming in. The other one that's actually lower right now is Glenmark, top FNO loser post numbers. So second place to Biocon itself. Both Biocon and Glenmark Pharma are not doing too well. On the way up, however, Sun TV has picked up some pace. It was higher in the Muhurat session as well and now up around 0.5% odd as well. Aurobindo Pharma is the other one in the pharmaceutical pack, which is adding on to some of the gains. We're seeing decent gains come by for names like Alchem and others as well. All Cargo Logistics reported their numbers too. That's the other stock which is higher. And, the one that really stands out on the way down right now is Anup Engineering, a small name, but was up 8% in Friday's trading session and also saw a decent move, follow-through move in the Muhurat session. So now it is seeing some bit of profit taking or pullback. By and large, in the broader markets, we have two stocks declining for every stock which is advancing. The advance decline ratio firmly in favor of decliners. But the question again, in low volumes, do we see a pullback or not?
Well, we'll see. But for now, it's back under 19,500. Yesterday, basically the gains yesterday being given back with what we have right now, almost. Just a few other names before we bring in our market master of the day. Biocon, it's got decent-sized volumes for this point in the day, as Mangalam and Nigel were mentioning, 3% lower. SAIL is down about 1.5%. It's got large volumes. Sonal was talking to us about Tata Chemicals. Tata Chemicals starts about 1.5% down. There is Car Trade. Car Trade was up about 20-25% last week. That starts this week with about a 2.5% cut. Quest Corp saw a very large move on Friday. Quest Corp is down about 1.5%. JSW Infra, the newly listed ports company, that is down about 1.5%. Kaplan Point is down about 1.8%. There is Medanta. I think Medanta saw a move, a decent-sized move yesterday, and that is down about 3%. So these are just pullbacks and those kind of moves which we're seeing. Texmo Pipes is another one which is down about 5% or so. You go down the list and volumes start to become pretty thinned out. The other big capital markets play which has done phenomenally well is CDSL. CDSL is the top volume-led gainer today, 2% at about 1873. And Aurobindo Pharma, Marksans, some of these we've of course already mentioned. Inox Wind is up about 1.6%. So we'll come back to some of this stuff. SBFC, that is Small Business Finance, that is up about 1.5%. Again, recently listed, stock had a decent sort of move, and then it did come off quite sharply. So with just a couple of minutes behind, we're down about 70 odd points or so in terms of the market action. Saurabh Mukherjee is with us, founder at Marcellus Investment Managers. He's a market master of the day. Saurabh, good morning. Great to have you with us here. Happy Diwali. And greetings of the festive season from all of us here at CNBC-TV18 to you, your team at Marcellus. How are things looking, Saurabh, from an overall kind of market structure point of view? The consensus kind of bet which many are making is twofold. One, large caps are better placed than small and mid caps. Two, financials, which have are the place to be. It's almost like a no-brainer. Do you agree with those two statements, that point of view? Go on. Saurabh, can you hear me?
I can hear you now, Prashant.
Okay, I'll repeat. Let me first wish you a very happy Diwali, Saurabh, and greetings of the festive season. I began with that, so it's good to see you this morning. I was asking you, the consensus in market seems to be twofold. One, that large caps will do better than mid and small caps, and second, financials are the place to be. They're a no-brainer. Do you agree with both those?
I think let me start with the piece on large caps. I would love to say that if I look at, say, consistent compound risk portfolio, which is primarily large cap, I'd love to say they'll do really well. But the thing is, if you look at the setup in the market, the export-centric small caps, companies whose products tend to get sold in the Western world, or companies that are competing with Chinese export, those companies have been beaten up quite badly in the small cap space. So I would say large caps will do well relative to small caps, subject to the caveat, where I think that as the global economy recovers over the next couple of years, companies in IT services, companies in specialty chemicals, pharmaceuticals, which have strong export franchises, I think will see the comeback through 2024-25. That apart, I agree with the core point that we've had a 3-4 year period, 3-year period in India, where, say, just to take an extreme example, an HDFC Bank is compounding earnings at 20-25% year after year, and I think it's barely given any returns over a 3-year period. Similarly, say a Kotak Bank, similarly an Asian Paints, and therefore the point that high-quality large caps are extremely tastily, extremely juicily priced. I would agree with that core point.
All right. Hi, Saurabh. Good morning and good to see you. And in the past as well, you have expressed your view or, a couple of these large cap names. But what's the change you'll have made in the portfolio from the last time we chatted? I recall we spoke about Vijaya Diagnostics. I think you doubled your position in Dr. Lal a few months or so ago. And I think the new addition was Prudent Corporate. Anything post that you'd like to apprise us on, maybe in terms of an addition or maybe a deletion as well?
So let's start with the small cap changes. So now Little Champs portfolio, we've sold Amrutanjan. We sold Amrutanjan through the last 6 or 7 weeks. And what we've added is 3 stocks. We've added RHI Magnesita. I think I spoke about RHI Magnesita a couple of months ago on your channel. And then more recently, we've added a company called PDS. So PDS helps Western retailers, say a Walmart or a Matalan or a Primark. It helps these companies buy apparel from Asia, specifically from Bangladesh. Companies partly based out of London and partly based out of Mumbai. It's been listed for a decade or so, but over the last 3 to 4 years, as China has faded away as a source for high quality Western apparel, PDS with its network in Bangladesh has really come to the fore. So we've added that to Little Champs. In Little Champs, we've also added Cera Sanitary Ware. This is a company we used to own 4 or 5 years ago. Then we sold it. I guess we shouldn't have sold it 5 years ago. When we sold it, we shouldn't have sold it. Company continues to do well, as the name suggests. It's number 2 in sanitary ware in India. I think they've made tremendous strides in their working capital cycle over the last 5 years. I think working capital has shrunk from 110 days to 70 days. It's always been a well-run company. Vikram Somani and family have run it well for many, many decades. But I think startling improvements in efficiency and working capital cycle. And as we get into the more advanced stage of the real estate cycle, we would like to make money rather than buying real estate developers, make money through late cycle plays like Cera Sanitary Ware. So that's the small cap additions. In large caps, in our large and mid cap portfolios and consistent compounders and rising giants, we've also added Trent. We built that position over the last 10 weeks or so. Results have been tremendous, but what's really led us to buying Trent over the last couple of months is the fact that not only has Zudio turned around, we reckon Star Bazaar is also becoming profitable. And all credit to Noel Tata and team. West Side was a known profitable proposition, but to turn Zudio into a high growth engine and now turning their grocery format profitable, a lot of credit to these guys. And we're hoping that trend compounds for us, much like Titan has done over the last 5-6 years for Marcellus' clients.
Well, sort of interesting picks out there that you've taken. In fact, interestingly, we did speak to the management of PDS just last week, and they indicated that they would eye that 5% net profit mark as well, net profit margin mark as well, as they do sourcing as a service. That was an interesting insight that we got into their business. But speaking about Trent, PDS, these enablers of retail, what are your thoughts on V-Mart? That has been your portfolio stock. Second quarter wasn't as good for them. And the management did say that the wedding season hasn't started as well as they would have liked to. This at a time when you're adding other value retailers, Trent versus V-Mart, does it tempt you to perhaps take some off the table on V-Mart or maybe double down given the weakness?
So look, V-Mart's been in the portfolio for the last 4 years or so. And clearly as they've come out of COVID, the business has come out of COVID weaker. V-Mart's business has come out of COVID weaker than it went in. I think this sort of three-pronged challenges here for V-Mart. Part of it is well-run firms like Trent have made a real impact in the value fashion space. By value fashion, I mean the price point around 400, 500, 600 rupees. Firms like V-Mart and even D-Mart really used to have this space to unto themselves. Trent has really made an impact here, as has Reliance Trends. And in addition, I think what they've been impacted by is the online play. The online play has become far more powerful post-COVID. So I think Lalit Agarwal and management are aware of these challenges. They're trying their best to deal with them. I think the last 6 months we've seen some signs that they're being able to come to terms with the problem. They've hired some people from other retailers. They've revamped their lineup. I visited their stores in both Eastern and Western India. The V-Mart stores seem refreshed. And we are hoping through the festive season, through the wedding season, we're hoping that V-Mart can get some of the zing back into its franchise. But I agree with you that this was a franchise and we bought it 4 years ago. We had a good couple of years with it, but it's come out of COVID weaker than it went in. And ironically, Trend's success is in part at V-Mart's expense.
Would it then make sense for you to, go the relaxo way on V-Mart as well? Maybe bite the bullet and perhaps look at another opportunities?
So in small cap investing, one learns to be patient. If we sold every small cap and they've had a few rough quarters, then I wouldn't be sitting here. In small cap investing, you learn to realize that companies go through their ups and downs. I'll give you an example, a company that we don't own, but I think a company that's done extremely well over the last couple of years after 9 or 10 years of working very hard. It's LG Equipment. I think I've known LG Equipment for more than a decade. They make air compressors. They put the hard yards in for 8, 9, 10 years. And in the last 2 to 3 years, as in the post-COVID world, they've really come of age as a high-class franchise. So the nature of small cap investing is such. You have to understand companies, understand that management teams take a while to fix issues, and persevere with them whilst we go through that.
Okay, I got that. Saurabh, let me just ask you about the financials space, right? What are your thoughts? What's the best thing to own there? HDFC Bank everyone likes as a stock, but it's a very large book, right? 25 lakh crores. Is that? Are there better things to own there? What's the sense?
I think there's two really attractive pockets in financials, and I think there's one area of danger in financials. Just quickly, the area of danger is unsecured retail. We've sort of written a note about it. 10,000, 20,000, 30,000 rupee loans. We think the alarm bells are ringing here. There's significant signs that NPAs and delinquencies are picking up in this space. Thankfully, HDFC Bank, just to take an example, has throttled off on this. So has Bajaj Finance. By the way, all the stocks I'm mentioning are part of my portfolio, my parents' portfolio in Marcellus, and our 10,000 clients' portfolio. So Bajaj Finance and HDFC Bank have throttled off on unsecured small ticket retail lending, but I think there are other lenders out there badly exposed to this, and I think there's a challenge coming here. I think the parts of lending which will do really, really well in the next couple of years is, firstly, I think home loans. I think we're in a stage of the economic cycle in India where even with rates at peak, we're seeing very strong demand for home loans. Over the next couple of years, as interest rates come off, I think home loan demand will pick up. And in that regard, say HDFC Bank's acquisition of the HDFC Limited book, I think will bear fruit. And that's why we're very happy shareholders of HDFC Bank through this whole merger period. Similarly, say Bajaj Finance, which has built a big mortgage book over the last 5 years, I think they too will benefit. I think mortgages, this whole entire middle class India buying their homes, whether we play through the mortgage lenders or we play through the construction material companies. I think there's plenty of money to be made there. And the other area is corporate lending. Corporate India's balance sheet is the least geared it's been in 20 years. And I think as we get into the reduction in the rate cycle and a global economic recovery over the next 2 to 3 years, you'll see a real boom in corporate lending.
All right, Saurabh, always a pleasure listening to you. Thank you so much for joining in. Once again, season's greetings to you as well and your team. With that, let's shift our focus towards Biocon. Among the top F&O losers today, the company recently reported largely below estimate numbers in the second quarter. We caught up with their group CEO, Peter Bains. He spoke about the business outlook and also the performance of biosimilars itself. Let's hear him out.
We're very pleased with the progress we're making with the transition of the Viatris business. And in the quarter, we completed the transition in the United States, obviously a very major market. And we're on track to complete the transition in Europe and the remaining emerging markets before the end of this fiscal. So making very good progress there. And delighted, I think, to see the traction that we're getting with the major brands, both in the United States and in Europe. So, for example, with Fulphila, which is biologics pegfilgrastim, we saw market share increase from 11% to 19%, with trastuzumab from 10% to 12%, and with the Semglee glargine from 9% to 11%. So that demonstrates the real power and strength of the commercial engine in the United States. And in Europe, we saw a similar pattern with market share improvements across the portfolio of assets, which augurs well for Europe for the future. And of course, that was supported by growth in the emerging markets, particularly in the insulins. So we're very pleased with the progress we're making. We still got work to do, particularly in Europe, which is more complex, but we're on track to complete the transition before the end of the year. The reason for that is just really tightening the focus of our business around our core therapy areas. So nephrology and dermatology were non-core, so we're going to focus on our core areas. And the use of funds, will largely be to offset the debt that we have. We're looking at a number of options there. So, we have already taken down the debt at some level through structured equity. That remains an option, but there are a number of other levers that we're looking at as well. And we'll be working through that, I think, and reducing the debt level that we have over the coming quarters.
All right, from one pharmaceutical company, let's go on to another healthcare diagnostics company. Fortis Healthcare reported a steady set of numbers in the second quarter. Revenue saw a growth of about 10%. Hospital revenue aided by improvement in the average revenue per operating bed, but margins came in flat on a year-on-year basis. We do have Ashutosh Raghuvanshi, who's the Managing Director and the CEO at Fortis Healthcare, joining in. Ashutosh, thank you for joining in, and season's greetings to you and your team. Just wanted to know about a couple of details for your second half. What kind of occupancies and average revenue per occupied bed are you factoring in for the second half of this year? 70% plus for both these factors?
See, we have seen a very steady growth in the average realization per occupied bed over the last about 6 to 7 quarters. And I think that trend should continue. And that is primarily coming because of the complexity of cases is increasing, and the kind of patient mix and case mix we are having that is resulting into that. As far as occupancy is concerned, we expect it to be somewhere upwards of 70%, which would be slightly higher than the H1.
And average revenue per occupied bed, where would it be in the second half? How much higher would it be?
See, the growth rate of RPOB has been very high, and I don't think it will remain at the same magnitude, but we expect at least 8 to 10% increase in that.
Got it. Hi, good morning, Mr. Raghuvanshi, and always good to see you in. Wishing you and your team a very, very happy Diwali. Well, you know, in terms of your numbers, let's slice it a little bit more. The surgical revenue, I think that's at around 61% of sales. So give us a few more details. High-end surgeries, how much do they contribute and where is that number headed? If you could give us a bit of a guidance out there. And international patient revenue as well has moved up. What's the guidance out here and where do you see this number move to?
So the complexity of cases has been increasing. As I said, that, you know, our portfolio is such that we do tertiary, quaternary kind of care. So that kind of cases, majority of the surgical revenue comes from complex work itself. Neurosurgery is a big part of our portfolio. Other than that, we have a lot of orthopedic, joint replacement, robotic surgeries, etc. So that trend would remain as such. And as far as international business is concerned, that has grown significantly, but it has been slightly below our expectation. We expect to see a better growth because we are going for several measures like direct sell into different international markets, etc. So we expect that to increase marginally during this half, but I think in the subsequent years, we should see a much better growth on the international as well.
How much will it contribute as a percentage of your mix?
As a percentage, you know, we have still come back only to the pre-COVID levels, which is approximately 10% of our revenue from the international. And we expect that to remain more or less in percentage terms at the same level, but in absolute terms, it would grow. The reason for that is because our base of domestic patients is continuously increasing at a fast pace.
Okay, all right, no, fair enough. A lot of hospital chains are focused on their international patient segment, so we'll sort of keep coming back to you for more information. Mr. Raghuvanshi, good morning. Prashant here. If you can talk to us a little bit about the diagnostics business. I think here growth perhaps is lagging, you know, players like Dr. Lal's, etc. by some bit. Could you explain what was the operating environment like in terms of competition, etc., discounting? Dr. Lal, by the way, was with us, I think, the week before last, and they were telling us that, you know, competition is still there, but it is not price-based anymore. That worst of discounting, etc., is behind. Do you sense that as well? And for Fortis's diagnostic business, what were margins this quarter, and what's the guidance?
Prashant, as you must be aware that our subsidiary, Agilus Diagnostics, has filed for an IPO. So I'm sorry, but I will not be able to answer any specific forward-looking questions. The general environment of diagnostic is concerned. It definitely is settling down and is becoming much better than the challenges of past.
Okay, so can you tell us the IPO? I mean, can you talk to us a little bit about the IPO itself, or no? That's off bounds for now.
Yeah, no, sorry, I don't think so. I would be able to speak about that.
Okay.
All right, that'll be interesting. But, you know, just your thoughts on, not specifically about the IPO, but by when do you think, you know, the street should look at the listing or the offer?
We have filed in the month of September, and depending on all the clearances, it will go. Of course, we will keep you posted as it develops.
Will it be a fresh issue or just an offer for sale? Just wanted to understand that. Or a mix of both?
It is primarily an offer for sale.
Okay, all right, Mr. Raghuvanshi, let's focus on the business then, because you're not giving us too much with regard to that IPO, and we'll wait by for further details on that front. But tell us, you know, are you looking at divesting any of the non-core assets or a couple of, you know, parts of your business that you're looking to divest, or are you done with that?
No, see, as you must be aware, that we have already divested one of our facilities in Chennai.
Chennai,
We
yes.
continue to sort of review our portfolio and see the focus geographies where we have good presence. And some
Okay.
of the facilities we are in the process of evaluating whether they are enough, they're important enough for us in the larger scheme of things. And
Okay.
we would possibly be looking at one or two more areas as well.
So we can hear about them in the coming quarter, second half of the year?
Absolutely.
Okay, and final question from my end then. What's the status on the open offer from IHH? We have not heard about an update out there. If you could tell us, where is it at now and when do things get resolved?
So the legal hearings are still, legal matters are pending, and in the Delhi High Court. So we expect some clarity to come from there, and that would determine the approach. As far as MTO is concerned, that is an IHH matter. But what I'm aware of is that as and when at the earliest we can get the necessary clearances, we will go ahead with it.
You said you are looking at rationalizing one or two more areas, or looking at unlocking value out there, or divesting those businesses. Could you give us a sense of what geographies and what hospitals you're talking about?
So we have a cluster strategy. So the clusters we are focusing on is Punjab, NCR, Western around Mumbai, Kolkata, and Bangalore. We are looking at Chennai asset as a potential asset for divestment.
All right. So after having divested the Arcot Road facility, you are looking at another asset for divestment out there as well. Take that point. Thanks a lot, Mr. Raghuvanshi, for joining in and giving us a detailed outlook on your business, as much as you could have given us. With that, we'll step into a short break, and on the other side, we get chatting with the management of Rail Vikas Nigam. A big mover, Pradeep Gaur, joins in to discuss their second quarter earnings. Later. We will also connect with Muthaiya Murugappan of EID Parry for their second quarter performance. Stay tuned for that too.
Welcome back. It looks like on the markets, if yesterday only the bulls showed up, today the bears are showing up. Low volumes yet again, but for the time being, the Nifty is down close to around 80 points odd. Good time to welcome management and that of RVNL. Remember, in the past 1 year or so, the stock has done very, very well with that rail theme. The question is, how does the year pan out and what's the way ahead from here on? Mr. Pradeep Gaur, the chairman and managing director of the company, joins us on the show. Good morning, Mr. Gaur, and first of all, a happy Diwali to you, your family, and your entire team at RVNL. Well, getting to the numbers, in the first half of the year, you'll have done close to around 10% growth, which is something that you were guiding for as well. But you also mentioned that maybe the growth on the profitability will be far better. So at the halfway mark, could you tell us for the year, what are you likely to grow by, both on the top line and more importantly, on the operating profit and PAT front? Can you do 10% or more even there?
Good morning, and thank you for your warm Diwali wishes and my wishes to you and each and everyone in CNBC. As far as half-yearly results are concerned, we have, as you rightly mentioned, we have grown by around 10%. And while our profits have increased by almost 20-21%, and this trend will continue, and we are very confident that in a balanced 6 months, the bottom line will improve even further because more and more portfolio is now coming from the projects which we have taken on bidding, where the margins will be better than what we have in the projects which were taken on assignment from Ministry of Railways. So I'm very confident about it, and things will move, because the margins will be better in that compared to the other projects.
Okay, so top line growth of a little more than 10% or more, and operating profit and profitability for the year will grow by more than 10%, right, sir?
Yeah.
Did we get that correct for FY24?
Yeah, as far as turnover is concerned, see, we are under a transition now, because the projects what we had taken on assignment from Ministry of Railways, their volume is coming down, while the projects what we have taken on bidding will grow up. So this is some sort of tapering down of one and rising of other. So as far as what I can be assured, what I can be absolutely sure of is the bottom line. Top line also will try to maintain, but as you can appreciate, there is a bit of transition here. So that has to be accounted for.
Okay, so we will wait by for stability to come by as you are currently in the transition period. Just a couple of more details. As far as your bidding portfolio is concerned, what's the kind of order inflows that you expect in the second half of this year? You have an order backlog of nearly 67,000 odd crores. And, international orders, that is likely to be a big catalyst for you. How much is that as a proportion of your overall mix right now? How much will that be going forward, say 12 to 18 months from here?
Yes. So as far as order book is concerned, as you rightly mentioned, it is around 67,000 crores, which is almost 50-50 mix of both projects what are on assignment from railways and what we have taken on bidding. So our strike rate of whatever we have projects we have been bidding has been around 35 to 40%. So our aim is to take this order book to at least 1 lakh crore by the end of the year. So that is our plan. And as far as projects abroad is concerned, presently we are working only in Maldives, where we are successfully executing a very strategically important project of Government of India. But we are going in a big way as far as foreign projects are concerned. We have now established offices in Middle East, that is in Oman and UAE, and we have now established one office in South Africa. So these are the two focus areas, the Middle East and Africa. That is what we are aiming at, and I can assure you that in very near future you will be dealing with many projects in both the cases, because we have already done bidding for one major project in Saudi Arabia, and we have given expression of interest in Oman as also in South Africa. So, and since we want to have a a sort of permanent foothold there. So we have decided to establish our offices, and our offices are already established there. So a lot of portfolio expansion on foreign projects in these two areas is our focus. In addition to Southeast Asia, Vietnam, that is another area of focus.
Mr. Gaur, how much of your overall portfolio will then be from international business is what I'm trying to get at. I mean, yes, there are a lot of countries, but as an overall part of your portfolio, how much will come from international according to you?
We are looking at to gradually raise it at least up to 40 to 50% of the total.
Okay.
That is the way we have done the planning of our things. So we are quite aggressive about it. And one area which I forgot, just missed out, was even in Kyrgyzstan. There also we are in final stage. So you will see a lot of expansion of our projects portfolio abroad. And it will be a fair mix, around 40 to 50% in very near future.
40-50% of revenues?
Yes.
Okay.
No,
right.
I'll not say revenue, our total portfolio.
Okay, so that would be order book?
Yes, order book.
Okay, got it. Mr. Gaur, since you mentioned Kyrgyzstan, that's going to be a very, very important, and it's a multi-billion-dollar order as well, right? Opportunity. So give us some timelines first. By when do you get clarity on this? And since it's going to be a multi-billion-dollar opportunity, how does the funding shape up from here?
Yes,
only for this order, sir?
Yeah, I entirely agree. This is actually slightly late than what we had expected. So the sort of financial closure and final approvals of government is, that is in this stage. And last week also we had a detailed discussion with them, and we are in constant touch with them. Actually, it should have happened by now, but sometimes processes, because this is for the first time they are going for this model in a big way. So always there are more discussions than this thing. So once this is in place, I think next projects will be faster. So still I'm expecting it should be a matter of 1 or 2 months. That is the indication I'm getting.
So, Mr. Gaur, when you join us here on CNBC-TV18 at the end of the third quarter, you'll have clarity on that. It's likely to be signed out?
Absolutely. That is what I'm hoping.
And what about funding? Since it's going to be a multi-billion-dollar project, how does that shape up? I mean, what kind of a plan do you all have in mind?
Yeah, as far as funding is concerned, the funding is entirely by government of Kyrgyzstan. They have entered into financial arrangement with the funds. Which I would like, I may not state now, because unless it is totally finalized. So as far as funding is concerned, RVNL is only for the execution, and the funding is being taken care of by government of Kyrgyzstan.
Speaking about the government, it's they did an OFS in July itself at around 119 rupees per share. Since then, the stock has moved higher, closer to around 160 rupees odd. Do you think the government would be tempted to perhaps come out with another value unlocking measure in their holding here? Or would they hold on and maybe next year, where all these triggers that you're talking about come by, we'll see another OFS? Your thoughts here?
Yeah, as far as the present disinvestment, whatever has taken place is a part of the minimum shareholding of the government. So next, what government will do? Yes, it is not right for me to speculate on that. But I can only say that whatever market, the capitalization or whatever the market has taken, it is a manifestation of confidence of market on us. The way within a very short period, we have been able to transition ourselves and have been able to take a lot of projects. And not only taking a lot of projects, we have successfully executed in a very challenging manner. I can share 2 projects for your, for the benefit of your viewers. One is in Indore Metro. Within one and a half year, we have been able to hand over 6 kilometers of track where trial has been done. So this has been, based on the record, it is the fastest done ever in the India. Similarly, the Maldives project has taken off very well, and we have completed almost 10 hectares of dredging in a period of just four and a half months. It was a very challenging project. Not so. As far as project execution and this thing is concerned, that is the main strength of RVNL. And
Got it,
just
sir.
to
Got it.
just one
We are just running out of time, so we will
Yes, sir.
have you back again, sir. Thank you very much for joining us. Great
Thank you.
speaking with you, and once again wishing you a very happy Diwali and season's greetings, sir. Thank you. Well, we've got the market, which I think is down exactly where we started, 70-odd points lower. But we've got the next management ready with us. EID Parry is the company in focus, part of the Murugappa group. Revenues for EID Parry jumped 12%. Gross margin contraction led to some EBITDA losses. In fact, the sugar business reported losses due to export release order restrictions imposed by the government. We've got the management joining us to take us through some of this. Mr. Muthaiya Murugappan is a whole-time director and chief executive officer at EID Parry. So thanks for joining us. Season's greetings. Happy Diwali to you, to your family, to your team at EID. Prashant this side. I just want to start by asking you, sir, what is the outlook for the refinery segment? It has posted losses for the last couple of years. How did it do in the quarter? And what is the outlook? Do you think we can see a complete turnaround? Because I think what was hurting that segment was high fuel costs. Is that starting to change now?
Yeah. So Prashant, very good morning and season's greetings to all of you at CNBC-TV18 and all your viewers as well. Hope you all had a very good Diwali celebration. The refinery segment, yes, we have had some challenges. I mean, the refinery was set up, in a multinational partnership more than a decade ago. The partner and us parted ways. And ever since, it's been quite a challenging environment. Spreads have narrowed. In the recent years, we have had some operational issues, and that has plagued the balance sheet. This quarter, however, was a better quarter. We had some good spreads and good volumes as well, so we were able to pick up the pace a little bit. But we still have a lot of work to do on this business. We need some partnerships to be put in place, which we're working on, especially on the trade desk side. So that is work in progress. And we already hope to put the business on a strategic path, on a better strategic path going forward.
Could you give us some numbers, sir? What could this, will it turn profitable on a steady basis a year from now? Just some numbers would help. And what's the capacity? Yeah.
So we've had a reasonable Q2, and I think we should have a steadier year this year compared to last year. Last year, of course, we had some operational issues. We don't give guidance and talk about specific numbers from a forward-looking perspective, so I will refrain from that. But we should have a steadier year this year than we did in the previous year.
And what's the capacity, sir?
It's 2 million tons.
2 million tons? 2 million tons a year?
Yeah.
Okay. All right.
Okay.
All right. Hi. Good morning, Mr. Murugappan, and Nigel on this side. Season's greetings to you as well as your entire team out there. Your distillery segment. I think the last time we chatted, we were talking about, I think, in the past year, you sold something like around 10 crore liters odd, but you were adding capacity out there. And for this year, sales were expected, I think, to be around 14 crore liters, if I remember that number correctly. And revenues as well had to move up. Last year, I think you did around 650 crores. So what's the number we're looking at on both these two segments? That's in terms of volumes as well as in terms of sales value?
The distillery segment, Nigel, we will grow 30%. We have added some capacity which has come on stream.
Yes.
There's two other capacity expansion projects in the mix, but one of them will only come on stream towards the end of FY24 and one in Q1 of FY25. We will grow 30% both on revenue as well as volume this year.
Okay, all right. So if I just plug in those numbers, you'll end this year with at close to around 13 crore sales in terms of volumes, and the revenue number should be in that vicinity of around 900 crores. Are we getting it correct?
Reasonably accurate, slightly north of that in terms of volume, yeah.
All right, closer to 14 crore liters is what you're looking at. The capacity you said is increasing from 475 KLPD to I think around 600 KLPD here. What then would be the entire business's revenue potential when the whole capacity comes on stream? And once the capacity ramps up, you would see some operating leverage benefits as well, right? So what could a steady state EBITDA for your distillery business look like? at full capacity, and what exactly is that full capacity?
So once we're running at the full capacity rate, Mangalam, we'd be at about 1,200, 1,250 crores. The EBITDAs are also moving up. I think as we are getting the benefit of scale and understanding how to more efficiently run this segment, the EBITDAs are moving up. We were hovering around the 10% mark in FY23, and those EBITDAs have moved up in H1, and I think will continue to move up. I think what we'd be happy with as a company would be EBITDAs in the range of about 20% or just about 20% when we are at steady state once this capacities come on stream. So, sort of halfway through FY25 or 3 quarters into FY25, we'd be happy with these EBITDA percentages.
Just 2 more questions from my side, sir. One is on the branded sugar side. I think you had plans to increase that substantially. Could you tell us where that is, where do you plan to take it to, and what will that do to average realizations once you achieve that scale?
So Prashant, on the branded sugar side, we are currently at about 30% of our sales volume comes from branded, and this will certainly move up over time. We're focused on building distribution. We do get a premium in this segment, premium of about 1.5 to 2 rupees per kilo. I think as we build distribution, the intent is to, and we have about 8 to 9 sweetener products right now, which are in the market, largely southern markets in retail. The intent is to expand the product line. The Parry's brand is a strong brand. And I think we are looking to a broader share of the kitchen shelf as we move forward.
Okay.
Just one last question from my side, sir. On the nutraceuticals business, could you tell us what's the future? What are the plans?
So nutraceutical, again, I think when we spoke a couple of quarters ago, just like refinery, we need to put it on a better strategic path. Prashant, the business is under strategic review. And we are exploring various partnerships and options to put the business on a better track. We haven't seen much growth, and we are quite subscale in that segment. So we're working out how best to put it on a better strategic path. So when we have up, we will.
But it'll be part of EID. I mean, you will grow it with partnerships, etc. Or is it possible that you spin it out or sell it?
So I think, the option, the various strategic options are under evaluation and discussion. So I couldn't comment on anything specifically at this point in time.
And what about Coromandel stake? Any possibility that you look to divest a little bit more stake? Your shareholders will believe that's the real sweetener.
Nigel, no such discussion. I know we spoke about this last time as well. No such discussion.
Indeed. I just was wondering whether there was any kind of change of heart or change of thought, but thanks for clarifying that. So not looking to pay down debt. Well, it's always a pleasure talking to you, sir, and thanks so much for joining in. We look forward to having a chat with you sometime during this quarter or maybe at the end of Q3. Wishing you a good day ahead and a good festive season as well.
Thank you, and thank you for having me.
For the time being, though, let's slip into a short break. You come back, it seems the bulls are waking up now because the markets have recovered from the low point of the day. Stay with us.
Okay, welcome back. 55 points lower on the Nifty is what we have. Banks are down about 0.25%. The banks index, that is. Just one name I want to highlight. Biocon on the upside is jumping a little bit, 6-7% higher, and it's got decent-sized volumes right now. $400 on Biocon. There are the usual suspects like the Bombay Stock Exchange. BSE was up about 5%. I think yesterday it's up another 3.5%. So in the grip of very strong momentum, BSE. And we were talking about this with Mitesh earlier on as well. Mitesh actually is back with us with a quick check on things and what he'd like you to do. Mitesh, morning again. What's the reading of the screen and fresh advice?
Morning, Prashant. I think the good thing is that the Nifty managed to hold the support area of 19,450. Though the intraday low was about 8, 9, 10 points lower than that. But I think on an hourly closing basis, we are in good space. So I think if somebody wants to buy, this could be a good entry point with a 40-point kind of a stop loss on the Nifty spot. And if 19,450 does not break, then there is a good chance that we'll head towards yesterday's high, which was around 19,550, and then eventually even look for higher targets. So I'll approach the market with a long bias. I have 2 buy calls right now. Hindustan Copper, I think the stock has been running and it's moved up in the last few minutes as well. But buy here, and in case you get a mild decline around 155, add there. And keep a stop below 150 here. I'm looking at a target of around 166 to about 170. Disclaimer, we have recommended this to our clients, so there's vested interest. And the other one is Sun TV. I think a good reaction post the numbers. The stock has given a good breakout. That's a buy with a stop below levels of 656 and a target of 695 is what I recommend.
Right, good reaction on Sun TV. That stock's moved to the high point of trade. And interesting you pulled up Hindustan Copper, because I was just looking at the metals index, Mitesh, and it's the metals index which has led the market higher from the lows right now. So we have Hindalco, which is doing well, JSW Steel, all the metal stocks looking up. Prashant alluded to that big meeting between President Biden and Xi Jinping somewhere in the middle of the week. So maybe the street is looking at metals to play the sentiments out there as well. And with interest rates being near peak and dollar index stabilizing, that's one place that everyone will be eyeing too. But talking about some big gainers, we have Eicher Motors, which is the top Nifty gainer this morning. Good numbers coming in. Sonal joins in to apprise us more on that. Sonal.
Thank you for that. Well, yes, good numbers coming in from Eicher Motors. It was a beat on all parameters. If you look at the revenues, it was up 17%. EBITDA has gone up by 32% as well. And margins, they have expanded by 320 basis points on a YY basis. And profit growth has been very strong. This time around at 55% to come in at 1,016 crore rupees. Now, the domestic market share, motorcycle market share has risen to 8.2% in first half of FY24 versus levels of 7.8% in FY23. This is share of 250cc and above. Even they are gaining market share in the 125cc segment, and that is something which is a positive indicator of fundamentals as well. Royal Enfield share of more than 125cc bikes has risen to 32% in the first half of FY24 as well. Brokerages, they are very bullish. Morgan Stanley has an equal weight with a target price of 3,552 rupees a share. They say EBITDA was ahead of estimates, largely driven by gross margin expansion that the company saw in Q2. Jefferies is a buy call with a target price of 4,650 rupees a share. They say second quarter EBITDA and PAT rose 32 to 55% on a YOY basis, which is 6 to 9% above what they were estimating. So they have given a thumbs up to numbers as well.
All right, thumbs up to numbers and thumbs up to the broader markets as well. As we move towards a break on Bazaar, we have the mid-cap index, which is all but in the green now. A big recovery is what we've seen from the lows. Maybe after the short break when Lata comes back, she will have the mid-cap index in the green as well. But, it is the special segment. It's the economy. Lata will be discussing the downgrade of the US government bonds by Moody's and its impact on the US and India. She has with her special guests Neeraj Gambhir of Axis Bank and Steve Englander of Standard Chartered. Stay tuned.
Welcome to It's the Economy. Happy Diwali to all of you, but we are starting on a slightly serious note. In a surprise move on Friday night after the US stock markets closed, rating agency Moody's downgraded its outlook on US treasuries to a negative from positive. And the reason it cited was no improvement in the fiscal deficit situation and no foreseeable improvement in US debt and deficit. The action did not result in a rating downgrade. Moody still rates the bonds as AAA. It's the outlook that's negative. And as you all know, rating agencies Fitch and S&P already have downgraded US bonds, and they stand at AA plus and not at AAA plus for these two rating agencies. Nevertheless, we have to see how the impact will happen, and we will know that in the trading day today. But to help us parse the impact, I have with me Neeraj Gambhir, the Group Executive and Head, Treasury Markets and Wholesale Banking Products at Axis Bank, and Stephen Englander, the Global Head of G10 FX Research in North America Macro Strategy at Standard Chartered. Steve is joining us, of course, all the way from the United States. Gentlemen, thank you very much for your time. Neeraj, with your permission, I'll speak to Steve first because he stayed up for me and I'm deeply grateful to him for that. Steve, this Moody's changing in their outlook on US Treasuries, though it's not a downgrade yet. Now, will the market take it badly when it opens on Monday?
I don't think so. They seem to be a little bit late to the game, and I think the market has already absorbed the downgrades from the other agencies and kind of understands the fiscal situation. I think whether or not Moody's actually goes ahead with the downgrade.
But there is a fiscal issue separately. Every quarter when the Treasury announces its borrowing program, like it did in October, it does impact markets, doesn't it?
Well, we've probably seen most of the impact because I think the expectations are pretty pessimistic. But, if you take a look at the increase in the term premium, it's basically 50 to 100 basis points. It doesn't have to go to 200 basis points to be damaging. This is damaging enough. And I think it represents a market that's, scared of the fiscal outlook and sees no way out.
Okay. Well, what's your sense, Neeraj? Good morning and thank you for joining us. What's your sense? Do you think it just reminds the market time and again that there is this fiscal issue? Do you expect trouble?
Yeah, good morning, Lata, and happy Diwali to you and all the viewers.
Thank you.
Yes, I think it's once again, the conversations around US fiscal deficit, while it fundamentally doesn't change anything, I think it just reminds the market that this animal is sitting there and we need to worry about this. And clearly the forecast that Moody has put out don't give a very good sense of how and when US will be in a position to control its fiscal deficit. I think they've also flagged off the current difficult political situation that's there in US. And we know that there is a bit of a challenge in terms of extending the shutdown that is looming large. And we have to see how that plays out. And then the question of how the fiscal math will be negotiated between the two parties. All of this remains to be seen. And therefore, this is kind of a bit of a burden on the market at this point in time to see how this funding is going to be managed. I also want to highlight here two things. One is that as US Treasury supply has increased, the holdings by the global central banks has been steadily coming down. So there is one element of that demand which has been steadily coming down, and it is creating a bit of a demand-supply challenge. The second is that you must have seen the survey on the inflation expectations in US, and there has been a bit of an increase there. We have been now seeing a steady increase in the inflation expectations. And this should be a big issue for Fed. I think Fed, therefore, cannot keep the foot off the brake for now. Because so far the story has been that while in the short run inflation has gone up, but the long-term expectations have been well anchored. So if the well-anchored story takes a bit of a beating, then there is cause to worry.
Okay, well, let me get back to Steve on that point. Steve, what do you think will be the range for the US Treasury yield for now? Does it stay closer to 5?
Well, in the longer term, it obviously depends on how inflation and fiscal play out. We think in the shorter term that the U.S. economy is going to slow down, and once it does slow down, we'll get some relief that the 10-year yield will go, closer to 450, 425, somewhere into that range. It may not stay there, but I think when the market absorbs that there is a genuine slowdown, we will see lower yields.
Okay. What's your sense, Neeraj? Are you penciling in that U.S. yields will fall much, or if we have to, make peace with a closer to 5% U.S. yields for, say, a better part of 2024, what does it mean for a country like India?
So clearly, it's slightly hard to take a definitive view on this because data is evolving and the situation keeps on changing. But my guess is that somewhere between 4.5 or thereabouts, 4.5 to 475 is a good range for the short term. In the longer term, we'll have to see how inflation story settles down, how growth story evolves from here. But yields at these levels of between 4.5 to 5% clearly reduce the premium that India has over US yields. Our domestic bond yield is currently close to 7.5%. So it does make the issue of flows to emerging market countries a bit more challenging. The positive on India's side is that we have this index inclusion flows, which are expected to start from the first quarter of next calendar, and they are likely to actually help, in terms of increasing the demand of these bonds from the international players. So I think if that was not the case, probably we would have seen a far higher impact on the domestic yields than what we have seen so far.
Okay. I'll come back to you specifically for the domestic pressures on the yield. But let me just finish the currency bit. Steve, dollar index at around 105.89 as we speak. Will it strengthen because of the high yields?
Ultimately, we think it's going to weaken, when the yields come off. That may not be for a couple of months. So in the meantime, I think that there is some room. The economic picture in Europe is pretty dismal. The UK is pretty dismal. I don't think the dollar is going to go to the moon, but we could still see a couple of % of gains in the short term before it turns around.
Okay. Neeraj, when I asked you about the rate differential, the US yields and its impact on India, I was expecting you to touch on the currency. What's your sense? I mean, the RBI has threatened an OMO, which doesn't look possible because the market is already deficit on liquidity. What's your reading of the currency? The RBI let it go on Friday. You think a slow depreciation? Any thoughts on the rupee's trajectory?
Yeah, I think, if you look at year to date, rupee has been fairly strong compared to some of the other major emerging market countries. And the fact that US dollar has strengthened of late hasn't really reflected in the way rupee has behaved. It's very well anchored. So some bit of steady depreciation bias in rupee, though I don't expect too much of volatility because it is being well managed, is par for the course in my view. So we should expect a steady depreciation in rupee to continue. Also, given the fact that we have seen a significant outflows from equities in the last 4 or 5 weeks, I think total about 40,000 crores has gone out. That is also putting a bit of a pressure on the currency market. But it is very well behaved. The volatility is quite low. In fact, if you see the volatility in the options market, it has a multi-year low. So steady depreciation bias is my view. I think we should move towards about 83.75 to 84 over the next few months' time as the dollar strength continues to have its play, as Steve mentioned. And we do see there is a bit of a challenge in terms of flows coming to the emerging markets.
Okay. What about an OMO now? Do you think that's ruled out? Because every day we are seeing the rupee in deficit. I mean, the liquidity in deficit. Is that threat over and done with?
I expect the OMOs to be used as and when the system becomes reasonably and sustained surplus in terms of liquidity. And in some senses, if the expectations on portfolio flows on fixed income materialize in the first quarter, that's the time that I think that it'll be more appropriate for Reserve Bank to start using OMOs, because in any case, if they are intervening in the market to basically balance these flows, then sterilization of these flows would be probably done through the open market operations. So that's my expectation. As long as the system liquidity stays tight, I'm not sure if it makes sense to use the OMO as a tool for the time being.
Okay. Let me try and squeeze one more set of questions to both of you. Steve, is there a likelihood of a financial accident? Some economists worry that there will be a reset of rates in 2024 in the US for financial and non-financial entities. Do you think there can be such an accident?
There could be. I mean, it's hard to predict accidents. We all drive and we never expect to get an accident. I think that one thing that you are seeing is that there are pockets of liquidity, say from private equity, from other sources. You may not like what they're offering you, but at least there's a bid on the table for, commercial real estate and other assets like that. That said, I think we're also seeing that, credit is getting tougher. So you don't need an accident. It could be that we're just going to get a traditional slowdown because credit is tight, and that's going to generate, lower yields and a weaker dollar over time.
A quick reaction, Neeraj, do you think we should be prepared for something as yields rise?
Yeah, I think the chances of something going wrong increase as at these kind of rates in US, particularly an economy which hasn't seen such high rates in a very long period of time. But having said that, I must say that the credit markets in US have been very well behaved in this cycle. I think it's pretty surprising to see that why higher yields have not yet translated into tighter credit conditions or any accident on the credit side. But will something happen? Has the probability increased? In some senses, yes. But you could potentially have a very orderly slowdown in the US economy, which is also seems to be the base case for US Fed.
Okay. Well, we'll have to wait and see on that. Thank you very much, Neeraj and Steve, for your discussion on the US bond markets and its impact. Actually, Neelkan Mishra of Axis again believes there can be some bit of an accident in the US, but we'll wait and see. We'll wrap up on Bazaar on that note. There's a bit of red on the screen. Chartbusters will take the action forward.